Hey guys, Stock Saturday, and it's a slightly red week. Nothing too much, about 2% down. The S&P and the Nasdaq's slightly worse off than that. I think people have sort of overblown it a little bit because it did run up earlier in the week on the sort of lower inflation numbers. So just looking at the news for the week, so we had sort of inflation numbers coming in reasonably well. We also had UK GDP slightly better than expectations, so that was pretty good. We've had the CPI for the US come in, core CPI at 6% dead rather than 6.1%. That was 6.3 before, so coming down, but I always focus on the monthly more than anything, and that's 0.2% now instead of 0.3% expected. So it's easy to sort of annualize this and say, well, it's 2.4% annual inflation. It's not necessarily. It could sort of rise up again. It could be a sort of one-off month, but last month was 0.3%. So yeah, could easily be looking at sort of 3 to 4% annually already, rather than the sort of 6% that they're showing. So that was sort of what got everybody bullish, and then the UK came out before the Fed rate rise on Wednesday morning, even lower. So our core November was expected to be 0.5%, and that was 0.3. So yeah, everyone sort of got slightly bullish, even though ours is 10.7%. Was sort of on the annual, was expected to be 10.9, and people are saying, well, it's still really high. But it's whether you want sort of prices to actually come down to what they were before all of this started. This is sort of, before the war started. So yeah, do you want prices to sort of come all the way back down to there, which would be sort of deflation really from here, or do you just want it to stabilise where it is and sort of rise 2% a year? If we're wanting that, then we are pretty much getting there at sort of a 0.3% on the monthly. So not necessarily huge rises to get that 10% under control. A lot of people are sort of making the point that in 2 or 3 months, if the oil price stays where it is, then it'll be down about 30 to 40% year on year. So that'll start to sort of have a big effect on the inflation numbers. And then we got to Wednesday evening, and the Fed's rate hike was 4.5%, sort of as expected, but he was a little bit more sort of aggressive and hawkish in the sort of press conference that followed, and that sort of took a bit of a hit down. Stocks were sort of coming down on that. Morning, 7 o'clock in the morning, for some reason, the Bank of England do theirs. Theirs was also 0.5%, up to 3.5%, and people sort of expecting a little bit more. Yeah, and the Euros was as expected as well, 2.75% for the marginal lending facility. So everyone basically as expected. I don't think there was too much sort of noticeable news. EU inflation sort of down to 10.1% on the annual, but monthly core was flat. That was expected to be 0.6%. So that's rather interesting. That's a hell of a move. The others had sort of been 0.1, 0.2% difference. This was 0%. And standard monthly inflation was negative, but that was expected. So I guess that's fuel, and mostly fuel related and energy related. So yeah, that was pretty much the news for the week. Next week doesn't really seem a great deal at all, so might be a bit quiet going into Christmas, but we'll see. So I've been having a think. I put Redrow and Bellway on here rather than Taylor Wimpey and Barrett. Now that's sort of is what I'm holding at the moment. The plan was to sort of sell out of these two next Thursday, I think, and get back into Taylor Wimpey and Barrett. That would be my tax loss harvesting event done. And just sort of looking this week at sort of thinking that's £13,500. Taylor Wimpey and Barrett have both sort of held up reasonably well since the sort of Liz Truss bottom. I put Taylor Wimpey back at sort of £1 now, and Barrett sort of at £4. And the analyst estimates have been dropping tremendously. Taylor Wimpey was sort of 20p for next year and is now down to 11p because we've started to see the house prices falling off. Sort of mentioned last week, the monthly house price was expected to be sort of 0.2% or something down. That was 2.3% down. So if we are going to get a reasonable move downwards next year, then I just sort of think, Taylor Wimpey is going to be at sort of 9, sort of 7 or 8, including the net cash position, about 7 or 8 forward PE, which is okay, but I sort of had wide-eyed thinking that it was more of a sort of 4 or 5 PE, not expecting these estimates to come down quite that much. Probably means I should take these estimates with a pinch of salt, really. How you can sort of go from 20p to 11p in a couple of months. I guess they're just not focusing on them all that much until now. But I sort of think if they're going to have a rough year all of next year, then they're still going to be reporting that sort of rough year going into early 2024. So I'm not sure whether these would sort of hold up all that well. And do I want to be putting £13,000 straight back into Taylor Wimpey and Barrett at the moment? So if you sort of think for the next year, if say these forward earnings looking at sort of 2024 come up to potentially 13p, say, with sort of prices stabilising after a correction, and you maybe sort of give it 10 times earnings, then you're looking at sort of £1.30 in maybe a year and a half's time. A bit sort of pie in the sky figures, but sort of 30% gain in a year and a half didn't seem sort of all that attractive. The dividend will presumably get cut if we have a reasonable housing downturn, so that'll probably take another knock on the share price. And I just kind of felt there was maybe better opportunities, especially since these have, as I say, sort of basically risen about 25% sort of since 20% since the lows in October. So kind of thinking maybe better opportunities elsewhere, and £13,000 would be sort of better spent on a little bit more growth. I always said once we got sort of further into this bear market that I would sort of sell out of my value stocks and things and sort of go a bit more aggressive. So a number of options that I could get into. So I've not done too well with Silvergate so far. Bought a little in the sort of 21s and a little in the sort of mid 18s. Always knew this was going to be a bit of a rocky ride, but I do sort of like them going forward. Sort of in comparison to the miners, it's nice to sort of have a company that sort of even in the last quarter is still making 50% net profit. So I thought that was fairly good bet for the future. I can't see them sort of going belly up, unless this sort of contagion really gets bad from the Genesis crypto issues and sort of FTX. I think they're probably going to get hauled in front of the Senate committees and stuff as part of this FTX debacle. They're supposedly they were sort of the bank that facilitated the transactions. If you're not aware of the issue, FTX sort of moving clients' money over to their other firm, Alameda Research, and Silvergate, it seems, may have been the bank that made those transfers. So it's sort of how much due diligence they should have done on those transfers. A lot of people sort of saying they done all they would sort of really need to. They're both two, at the time, they were both two sort of fairly well-respected firms. There's no reason they wouldn't be sort of transferring some money. So yeah, they're not sort of, somebody said they're not the police, basically. They have to do a certain amount of looking. So I think they may have been sort of unfairly knocked down. So I do kind of look at the long-term, or next year and a half potential at least, of sort of crypto-related companies compared to the sort of house builders quite favourably. So I don't get into sort of crypto too much on the stocks channel, but if it's sort of relating to the stock portfolio, sort of we've got the halving, so the rate at which new Bitcoin is issued, halves in sort of early March, April 2024, so sort of a year and a half away, and yeah, we could sort of potentially get a reasonable move upwards into that. It seems sort of in previous cycles we always have at the halving level. It happens every 4 years. So yeah, I think could possibly be putting it into Silvergate Capital, or possibly some crypto miners. I know obviously I've just sold Argo blockchain and sort of redistributed that. Put that into Silvergate Capital, by the way. And yeah, sort of some of the miners are faring a little bit better. Hut mining do sort of have probably a little bit high energy cost, but they also have about 9,000 Bitcoin on the balance sheet. So sort of net cost of debt and cash on the books and Bitcoin, unless Bitcoin drops a hell of an amount, they could always just sell some of that Bitcoin and be fine and make it through this bear market. So kind of looking at some of the crypto miners as well. Also looking at sort of potentially, as it's not that money isn't in the ISA, potentially withdrawing a little bit of it and having a go at some sort of call options. A bit risky, I know, but they seem sort of, you could say, fairly low risk. You can buy 2-year call options, so betting on the price basically of where the stock is going to be January 2025, and you can sort of buy them for £40, £50, and betting that the stock is going to be, say, above $2.50 in January 2025, which, if the Bitcoin sort of halving rally plays out, then you could certainly see that. And if it doesn't get there, then you just lose your £40 that you put on it. But if it does get there, then you get sort of 100 times the share price difference, basically. So if you do a $2.50 bet and it goes to $5, then you get 100 shares at 100 shares at $2.50, so $250 for sort of a $40 bet. So yeah, I have been sort of having a little bit of a dabble. I've got about £500 in call options at the moment for sort of January 2025. Seems like a reasonable time period. It's about 7 or 8 months after the halving, so I think it could do well. But it is very tempting to sort of put this, obviously the call option money isn't available to go in the ISA, that's only on Interactive Brokers, and I do have to fill up the ISA before April. I've only done sort of 3,000 of it, I think. So the only other alternative was just selling holdings in the invest account and putting them in the ISA. But yeah, it would be nice to sort of fill that up, and could put some of that into Silvergate. I do also have a tax bill coming in January, which I'm awaiting the cost of, so I may just spend some of it on that. So other options are potentially Google. They've been sort of knocked down a reasonable bit, I guess, on sort of falling advertising spend demand, but not a huge hit. I mean, sort of 591 earnings down to sort of 526. I mean, there is 37 analysts working on next year's earnings, but I kind of wonder if this is, yet another Taylor Wimpey where all of a sudden they're going to say, oh no, it's actually $3 earnings for next year, and then the price will crater. But not too sure. Sort of an experiment with these forward analyst estimates. I mean, kind of think 37 people would be a little bit more on the ball, this sort of being an average of their predictions. So if they suddenly drop to $4 or $3 or something, then I'll know, and a lot of the other stocks that I'm sort of looking at as well, and I'll know maybe I shouldn't sort of rely on these at all. But yeah, sort of Google at a 16, 17 PE with sort of net cash position always looks reasonably attractive. So I've not been averaging down. I do have a position which is in the red, and sort of that could potentially be more attractive than the house builders. Another one that I've not really talked about, sort of being bullish on legacy auto getting into electric vehicles, sort of my Stellantis and Volkswagen bets. You could take a little bit of a higher level bet and sort of go for the commodity. So Albemarle are the biggest lithium producer in the world. Lithium has had a tremendous run up in the last sort of year or two, up from sort of, what is this, 60,000, 50,000, it's in Chinese yuan per ton, because a lot of the demand is in China, so I guess it gets priced in yuan for a lot of people. And yeah, up from 60,000 to now 562,000. So where sort of Albemarle was looking a fairly expensive stock sort of a couple of years ago, it sort of has run up, but it ran up quite a while ago. So sort of August 2021, it was at $236, and it's now $242. And the lithium price in August 21 was under 100,000. So I guess people were anticipating this move sort of quite a while back, maybe sort of pricing it in before it actually ran up, but it has now sort of stayed flat for a year and a half. And I don't know, the sort of the numbers, even the hard numbers coming in without analyst estimates, they've got sort of $28 for next year against sort of $242 share price, so forward PE of about 9, but the real numbers have actually been sort of coming in a hell of a way up. You sort of had $1 in earnings sort of last quarter of 2021, rising up to $2.38, $3.45, and then last quarter $7.50. They're sort of projecting this quarter by quarter to come down a bit next year. People sort of saying this price rise has been partly due to Chinese price gouging, but yeah, even if it sort of comes down, a reasonable amount, 500,000, maybe even 400,000. I just wonder if that would be a temporary drop before more rises. If you look at sort of lithium demand projections, it's tremendously high, but there are a hell of a lot of people looking to sort of capitalise on this rise and sort of spin up lithium projects. So you could get a very large increase in the supply with a very large increase in demand. And obviously, it's a bit unsure as to sort of what would happen to this price. But yeah, it could be a sort of commodity bet on the EV industry. You just had sort of Tesla unveiling their new semi truck, so that would use sort of massive amounts. I think someone said it uses the sort of battery capacity of 9 Tesla Model S's per truck. So yeah, if you start getting much more of competitors using this sort of thing, then lithium is going to go incredible in terms of demand. So the supply would have to keep up with that. But a little bit of a gamble. That sort of $28 billion seems a reasonable bet for sort of largest in the world. There are one or two others that I could go for, but kind of think with largest in the world being this cheap potentially, might just go for that rather than sort of a risky one. I think there's another one in Chile, SQM, that I looked at, but the sort of US stocks always seem to get a bit more of a premium in the good times. So yeah, I think I'd probably stick with them if I were to go for it. And lastly, or last possibility, Embracer Group. So I sort of did a bit of a look into them recently. They've sort of been running up slightly. It was in the sort of low 40s range sort of a month ago, but yeah, on the yearly it's been coming down quite a lot. And they have just had a bit of good news come out that they're making a Tomb Raider game with Amazon. So I sort of highlighted the buy that they made for Square Enix's assets, including Tomb Raider, and sort of said I assumed they were going to be carrying on the Tomb Raider franchise. And yeah, Amazon are looking to get in with them. Amazon also just announced a Warhammer TV series, so they're looking to get into their own media quite a bit. And Amazon Games are looking to, I guess, sort of co-produce a Tomb Raider game. Whether they want this to be sort of exclusive to one of their platforms, not entirely sure, but I guess we'll find out more. But yeah, it can only be good, I guess. Fairly sort of cheap buy for those assets for Embracer. And yeah, I sort of saw this as a reasonable buy when I was looking into them sort of last time, and could be a decent bet sort of with that house builder money. This again can't go in the ISA. I think it's only available on interactive brokers, so it would have to go in there. But yeah, it doesn't sort of bother me too much. So yeah, just I thought rather than sort of have a deep look into the portfolio this week, nothing sort of tremendously has changed. A lot of stuff is down 2-3%. This is the daily, but on the week as well, sort of some things are down 4-5%. Some are flat. But yeah, I thought I would rather have a look at what potentially to do with that house builder money. So do let me know your thoughts, whether I should maybe split it amongst all of these bets, or sort of go for something else, or maybe keep it within the house builders, or sort of average down on one of my other holdings. There's all sorts of sort of options that I could go for. A little bit sort of unsure, but yeah, let me know your thoughts, and like and subscribe. See you soon.